Hello, everyone. Welcome to Wally Global. Today is May 7th, 2025. Just now, wow, the Wall Street Journal had a very important article, which it revealed that China has stopped release hundreds, even several hundred of key data points. Many of us are worried, especially those who are actually concerned about the China economy and even the Hong Kong economy. People are worried. You care about a place and really want to understand its economy through data to see how it's doing, what needs saving, what requires help, right? But now this data is gone. Even investment. Without this data, how can investors assess investments? What are these hundreds of pieces of data related to? Land, unemployment rates, the inflow and outflow of foreign capital, and even the numbers on cremation are gone. So why did they quietly disappear? Perhaps everyone should take a look at what's going on. The Wall Street Journal. Before we get started, please give this video a like and leave a comment below. Feel free to share this video with your friends too. If you're into this kind of content, make sure to subscribe to my channel and don't forget to hit the bell icon so you'll get notified whenever there's a new video. Thanks a lot. In this episode, we're citing the Wall Street Journal to see what data they revealed is missing and whether their claims are accurate. You can all discuss and judge for yourselves. Before, studying China's economy was actually quite simple. There was an abundance of official data. Of course, whether you believe these data to be accurate is another matter, but at least they existed, right? For example, things like land transactions, unemployment rates, foreign capital inflow, grain and soy sauce production, cremation numbers, they had everything. However, in recent years, these pieces of information have quietly disappeared one by one, as reported by the Wall Street Journal. Hundreds of indicators have already vanished without a sound, and the government mostly hasn't explained the reasons. Many analyses suggest that precisely because China's economy is caught in issues like excessive debt, real estate collapse, and so on, there are always talks about collapse and explosions. I don't believe in these things. Why? There's something called gradual collapse without breaking down, right? There are institutional advantages. The Wall Street Journal says the government wants to control public opinion solely by collecting data to shape this image. So is it? You be the judge. I think we don't necessarily have to agree with it, but are the things it mentioned, the data, really gone? You can look it up yourself, can't you? They're nothing, but there's one thing that's definitely right. If you care about a place, you definitely want to know more about it and care about it, right? For example, your child, you definitely want to know their grades. You'd want to know if they have a fever, what their temperature is. If all of that is gone, can you say you love this child? It's just all talk, isn't it? All right, a very obvious example is that in the middle of the year 2023, the officially announced youth unemployment rate reached a new high. It was published at the time, and here, like the Wall Street Journal, it was brought up. It was announced at the time, but later, suddenly, there isn't any. But scholars estimate that the actual youth unemployment rate is now 46.5%, which means half of the youth have nothing to do. Is it really that exaggerated? Now look at this, the Wall Street Journal chart. By the year 2023, they stopped the data. But you can see that the trend has been continuously going upward. 2019 was a turning point for Hong Kong. Was it the same for the mainland as well? It kept going up, up, up. And here it soars up. And now we can't see it anymore. The youth unemployment rate is for those aged 16 to 24. And in that year, in August, the Chinese government said they needed to reassess the calculation method and thus stopped publishing it. After May, new data appeared and the unemployment rate suddenly changed to 14.9%. Wow, it was successfully reduced from 21.3 to 14.9. Oh, 14.9 is also very serious. Why not reduce it to 3% like in Hong Kong? But at the same time, it excludes 62 million full-time students. Why? The issue is, according to international conventions, only those actively seeking work, even if they are students, they should be counted among the unemployed. Changing the numbers like this is really unconvincing. In many places, when you go to university or attend vocational colleges, you generally have some work to do. You still have to look for a job. But There's also the year before graduation where you need to cover tuition, like working part-time while studying. Have you heard of it? Especially in some places where the GDP might be lower, per capita, meaning per person, the family might not be able to afford it, so it's factored in. But this time, after excluding them, it's concerning that it is still 14.9%, which is actually quite high. The Wall Street Journal said that the official statement predicts a gross domestic product growth of 5% for the year 2024, which is exactly the same as the target set by the government at the beginning of the year. But many economists do not accept it. Some say that if it were truly realistic, it should be even lower. Therefore, now more and more people are switching to another set of data to assess China's economic reality. For instance, for example, what? Box office sales, nighttime lighting intensity. Wow. Yes, okay, wow. A few wows. Actually, playing with data is this. The operating rate of cement factories, the electricity consumption of large power plants, and even the amount of news about gym and beauty salon owners scratching their heads if all these turn into grassroots economic indicators. So now, many of these numbers are gone, and you can't assess the economy through other means. The late Premier Li Keqiang had actually said as early as the year 2007 that he did not trust the GDP data from local regions. So if even Premier Li Keqiang didn't believe it, of course, we should trust the Premier. Li Keqiang said it was artificially created just for reference. However, Li Keqiang has already passed away, suddenly. Instead, he looked at electricity consumption. Li Keqiang looked at rail freight and bank loans to assess the economy. So these really show that this premier was a technical official, not just an markant. Officials, technical officials who truly understand the economy, using the economy, really want to see a true diagnosis, right? If you care about a place and want to help, you always need to look at the data. Without data, you can't see how you can handle it, how you can prescribe the right remedy, right? I took a look today. Li Keqiang was absolutely right. I even agree with what the Wall Street Journal said this morning. This particularly sensitive data mostly relates to real estate, right? However, in the year 2022, revenue from land sales by local governments plummeted by 48%. Now, everyone can see this scene, right? At that time, there was a steep decline and many places faced financial crises. These were all reported in the news, and even the authorities acknowledged it, right? However, by the year 2023, this data was no longer made public and suddenly stopped. Remember? Data stopped. Some think Tangs said that the housing vacancy rate in 28 Chinese cities is higher than that of the entire United States, reflecting oversupply. But a few days after the report, it was withdrawn, suspected to be under government pressure. The Wall Street Journal said this. Actually, the authorities have never released these vacancy rates, precisely because they don't want the public to know how bad the real estate market is. This is how the Wall Street Journal assessed it. In the year 2023, many graduates are unable to find jobs, and online, there are a bunch of photos circulating of people wearing graduation gowns. Ropes, then lying on the ground, seem like a form of silent protest. Even if the authorities want to downplay the actual situation, people use civilian footage to convey messages of real pressure, which everyone has seen. At the end of the year 2023, the chief economist of a state-owned securities company, Gao Shanwen, said something in Washington. China's growth could be only 2%. This statement immediately shocked the higher-ups and led to disciplinary action. Moreover, more seriously, the Securities Industry Association has also warned other economists to positively guide confidence, which clearly means that even speaking the truth has become a risk. Children, yes, so how can the Wall Street Journal say that? Actually, it is about boosting the economy, of course, spreading positive energy and good news so that everyone is willing to consume, right? Honestly, if everyone is panicking, it's not good for buying stocks, is it? And they wouldn't be willing to buy property, right? Actually, there is some reason in this view, if it holds true. So, by blocking out these bad news, can everyone continue buying things? Is that the case? really can't know. If you can't see it, of course, you can't comment, right? In April 2024, the Wall Street Journal mentioned that the economic outlook has worsened, and within 2 weeks, over several $100 million have fled the Chinese stock market, causing local retail investors to panic. The authorities reacted immediately, and the Shanghai and Shenzhen stock exchanges announced they would no longer release real-time foreign capital flow data, aligning with international standards. So, what was the result? The CSI 300 index dropped for 4 consecutive months until the government intervened to stabilize the market in September. Actually, there are both spicy and non-spicy ones. Don't be scared, don't let others know. But for investors, if you really know nothing, then you dare not invest, right? The risk has increased a lot. When you invest, you naturally rely on that data to see how it goes. It feels like you're betting on it and you don't feel like you're gambling. It's right. Some systemic funds need these references even more, don't they? If there's nothing around you, that means those risks aren't disclosed and you don't know the data. It's not just that they're not disclosed, but there's not even any data. So please don't. Some foreign capital is exiting even more aggressively. Do investors even dare to buy? Or what should they do? They might rely on the official statements from the mainland and believe in the government. Otherwise, just buy. That's how it is. This is the data. If aligning with international standards means those numbers cannot be seen internationally, they will not play. Also, what you just mentioned was saying, if you don't know whether to trust that data, like Keqiang said, or on the other hand, for other foreign investors, not disclosing won't work. People are smart. They will just look at other things like electricity and things like that, production. All right. This time, even without looking at those hundreds of pieces of data, that's really all Taiwanese stuff. What's the rush? Are you speculating? So, what I gave you, won't be without impact. That's a big deal. So, turning back so far, it's all Hong Kong. Listen, Hong Kong, the Chinese economy is certainly massive. It cannot be separated independently. If investors come to Hong Kong to invest, Hong Kong also experiences data release and unemployment is always 3% and so on. In cases where the situation in China affects Hong Kong more significantly, nothing can be lifted. How will you lift it? How will investors lift it in Hong Kong? We always have. The officials are also tightening the control of data provider. The data providers have all been acquired to stop the overseas access of the data on China. For example, the Wine Information began restricting Hong Kong users to access China data, such as the land auctions figures, the information about land, the data on land transactions, and some unemployment insurance benefits information not available as well now. Also, the national land by sales, the amount. Then it restricts everyone from lifting the fear of numbness in the data. Even online shopping data can't be lifted. An economist from a foreign bank said they had to go to Shenzhen on the weekend to download data using a mainland IP, saying it felt like being a spy. Don't you think? Very well. After the official statements, they no longer release the number of cremations. We now estimate that the death toll could exceed 2,100,000 people. At the same time, social media platforms have begun to tighten discussions about the pandemic. Therefore, fertility rate data cannot be trusted. The official claim is that 12,100,000 babies were born in 2020, but based on the number of babies receiving the tuberculosis vaccine, the actual number might be only 5,400,000. Why do I think the officials talk about injecting billions of renminbi into vaccines? In ancient times, primitive people didn't need injections, but now diseases are different. So 12 million and 504 are very far apart. Since the year 2021, the vaccine statistics have all disappeared together. Wall Street Journal tried to find them, but they were blocked and deleted, and this information and these data have vanished. Actually, it's a bit absurd, not to mention unbelievable. For example, the area of elementary school toilets stopped shipping starting in the year 2022, right? In 2023, strangely, soy sauce production reappeared, which had disappeared as of May 2021. These changes reflect not just simple economic issues, but a comprehensive information blockade. According to the Wall Street journals, there's no way to untangle what data is missing. The data mentioned above are just examples, among which some examples include the so-called toll road year-end debt balance, which are missing, and new stock market investors in China. Well, there are also some soy sauce production, right? And there are some of those cremation numbers are also unavailable. So I mentioned before that Guang Media has reported on this suspicion about Li Dan's grandfather. So I looked at Photon Media to see if there was anything redundant that doesn't need to be mentioned. However, it particularly mentions that for analyzing China's economy, the absence of this data is very significant, as this kind of data, such as the number of new registered stock market investors, reflects local retail investors' attitudes toward the market. The confidence is that I have been raised up to that big boss, which is this number, this number. If you can't access this number, you have no way of knowing, right? Additionally, for example, the total amount of China's toll roads and highways, along with US debt, is actually a key indicator used to assess local infrastructure financial pressure. Even these numbers can be talked about as if they've disappeared. Of course, when you reveal what is meant by being disappeared, everyone can see, and at the same time, it once again confirms, according to their statements, the official selectively releases content not only to maintain stability, but also because of a real fear. This is the biggest issue as it directly affects foreign investment confidence. The public's expectations and even the truth itself are being impacted. What do you all think about this? That's all for today's video. If you enjoyed it, please give it a like, leave a comment, and don't forget to subscribe to my channel. Thanks so much for watching. See you next time.